Global equity markets are rallying, and one economy that stands out is India's, considering the several positive macroeconomic factors. What's the outlook for equities and for India? I have with me Nitin Jain, the CEO and Principal Investment Advisor with Kotak International Fund. Hi, Nitin. Let's first start off this conversation by getting in your take on the rally that we're seeing in the equity markets. The major central bank, the US Fed, has not yet cut rates, but it looks like stock markets are already pricing in a rate cut.
Hi, Mobina. Good to connect with you again. So I think the global equity market are reflecting the economic resilience to some extent, and of course they're also reflecting the possibility of a Fed action sooner than later, despite the Fed cautioning against it. Now we know that we started off the year with much higher expectation of rate cuts, and now we are slightly moderated in our expectation of rate cuts. But that said, the rate cuts are imminent. Sometime during the year. And the economic activity globally has been better than what we expected. Last year was better. This year has been good. So I think on all counts, there seems to be better optimism in the equity market investors on the back of stronger economic growth and a possible rate action by the Fed sometime soon. Are the markets going ahead of themselves? At times they do, at times they don't. But that's something which is okay. From an Indian central bank perspective, we had the policy announcement where the Indian central bank also held rates at the same level at 6.5%. It was a very well-balanced monetary policy statement where they see there are some inflationary issues because there's some heat wave which is going on in India. In the short term, they are very clear that they want to bring down the inflation to the level of 4%, while core is already below that level. And they're holding rates for a little while longer. But our expectation is that by the end of the year, we should see some rate cut even in the Indian monetary policy.
India has been consistently topping the EM tracker, whether you look at the GDP parameter or inflation or current account deficit. We seem to be doing very well compared to other emerging markets. What's your outlook on India?
So whether it is EM or whether it is the developed market, among the larger economies, India's GDP right now stands apart. We almost ended the fiscal year FY24, which is year ending March 31st, 2024, with a GDP growth of close to around 8%, a reported GDP growth of close to around 8%. That was a good 100 basis point higher than what we started the year on expectations with. If you look at the next couple of years, we are expecting GDP growth to be around 6.5% handle over the next 2 years. Whereas we believe that global growth among larger economies will struggle at around 3% mark between both emerging market and developed market put together. So in that context, India's GDP growth now is differentiated. We've been saying this for a while, that India's growth is differentiated to the world and India's growth is differentiated to itself. Historically, we have had significant macro headwinds, and some of those macro risks at times had become unmanageable. As we speak, the growth opportunity in India is reasonably different than global growth opportunities. The macro fundamentals in India are much improved, and we can manage some risk on macro fundamentals, though, as we see in the next couple of years, those risks are, as it is, coming off. So it's a good combination of good, strong economic growth with resilient macro fundamentals, leading to stronger than expected earnings growth in the last couple of years. Now, we also know that the Indian market is beneficiary of strong domestic inflows. Now, that has been strong and growing. So on the last count, those numbers are almost now touching $2.5 billion a month. That's the SIP flows from retail investors. That is supporting equity market, and those flows are pretty much broad-based flows. So it is a broader economy, a broader market, which has been very resilient. So I think all in all, macro fundamentals, corporate earnings, flows have all been supporting the equity market story as we speak. And over the next 2-3 years, we see that Indian GDP growth will be very differentiated as compared to most of the larger economies, and macro fundamentals may keep on improving.
Now, despite all of these promising factors, foreign ownership of Indian stocks seems to be at a decadal low. Do you see that turning around and picking up anytime?
So when you look at the foreign portfolio inflows in the last few years, they have been muted. Now, and they're very important. Please do remember that global inflows into India in form of dollar inflows are very much required from an economy standpoint. We run a current account deficit. Our capital account surplus is an important macro stabilizer in some ways. But the foreign portfolio investments have actually been erratic in the last few years. Last year was reasonably strong. This year we saw a couple of months, in the initial period, some sell down, but the month of March has been good. But on aggregate, what we are seeing is that the foreign holding in India has come down to a lower level, possibly to a decadal low level. And that opens up room for their participation in an ongoing basis. Now, when you think about this year in particular, we would see that we are hopeful that we will get a reasonable amount of equity flows in the market. But more importantly, this year we will also see that India will first time be getting included in the fixed income index, the JP Morgan emerging market bond index. India will get included. So there is going to be some reasonable flows in the Indian market on the fixed income side for the first time. We do believe that global investors look at India on a very favorable basis. India has always been overweight in global portfolios, and now that overweight seems to be at the lower end. From the challenge that global investors face in India is obviously valuation. That said, as I highlighted earlier, that there is going to be a large amount of potential flows into the fixed income market. India gets included in the JP Morgan bond index on emerging market for the first time ever. We do see reasonably strong inflows on the fixed bond market this year. So in all, we see that global investors are taking a very constructive view on India, both on equity and fixed income on an ongoing basis, and there is room for their exposure in India to be increased. Now, we have also been highlighting that the nature of India's growth is going to be slightly different than its past. There is going to be a capital cycle and investment cycle which is kicking off. There is going to be a higher element of consumer discretionary spends on an ongoing basis. That also means that the investors have to look at India in a slightly broader fashion than they have looked at in the past. In the past, global investors have been very focused on the banks, the large consumer companies, the IT services companies, or some of the bigger companies. But now they need to look beyond those companies, because that is where growth is going to be even richer in the next few years. So that's how I think the global investor appetite should pan out. And there is, as we said, there is room for them to increase exposure to India.
There's a very important event, of course, in India, and that is the general elections. People are going to be watching out for several factors, especially perhaps policy continuity. How do you see the equity markets move, taking into consideration this all-important event?
So the election expectation has been building up in the market for the last few months. We saw a reasonable optimism in the market after the state elections, which happened in the month of October, November last year. When you look at opinion, the elections get started in a couple of weeks' time. It is going to be a long exercise. Close to almost 1 billion Indian voters will cast their franchise. So it's a very humongous exercise. As we stand, as we look at opinion polls suggest that Mr. Modi's party and Alliance NDA is likely to come back with a majority, more like a 2/3 majority in the parliament. And that bodes well for investors from a political standpoint, of political stability and policy stability. So I think in this year, when 2024 is going to be a year where there is going to be a large number of political mandates which will get refreshed or challenged globally, India does provide a comfort to investors that there will be a strong possibility of macro stability, political stability, and policy stability. So our view on election stands at this point of time that going by opinion polls, we should expect continuity. And that is good for investors for the next 5 years from a policy stability perspective.
Thank you very much, Nitin. That's the outlook on world equity markets and the Indian equity market as well. Thank you so much for watching.